How's it going, traders? It's the Pup of Wall Street back with another week in review. Today we're going to look at my top tech charts going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. If you have any questions, please leave a comment down below. Let me know what you think about these chart videos. And lastly, keep in mind this is not financial advice. I'm doing this only for educational purposes. So let's dig into these charts. So every week I review the same tech charts. Let's start with Apple. So, most of tech has been relatively weak to the market. We're going to be looking at the 30-week moving average. That's going to be your orange line. This here is our swing low anchored VWAP. It looks like that's where we're headed. So 152. I think 152 is the key. If we get a bounce off of that, I think that's a nice trade, potential 1-2 setup. But certainly could see a pullback to 150 and potentially down to that 618 retrace at 146.97. Squeeze momentum is shifted to the upside, but we did back test 50 on RSI here on the weekly. So I think 152 to 150, I think that's going to be a very key area for Apple. It's the make or break level I think we need to watch. But one concerning thing is we failed at that 30 weekly moving average backtest. Here's AMD. Semiconductors, definitely weak. These are my notes from last week, so I will be updating these notes for my paid community, but it's basically what I'm going to be going over in this video. Yeah, I mean, I had a target zone pullback last week. We obviously blew through that 618. So this much more likely to come down to the $70 level. Squeeze is setting up, but it looks like it might be an inverted slingshot. So be very, very careful if you're thinking about taking semiconductors long on this bounce. Look at the resistance off that 30-week moving average here. Next up is Amazon. Let me get that out of there. And yeah, you could see we came into the 50% retrace these 2 weeks and failed at that 30-week moving average. But we did hold this swing low anchored VWAP here into the weekly candle. So I think, 125 is a key level to hold. You could see it acted as resistance back here before we broke out. Now we've back tested that level here, and we're bounced at least for 1 week. Squeeze momentum did go positive, but we are below 50 on RSI, and we are below that 30 weekly moving average, and we are below the 382 retracement. So just need to be pretty careful here. Maybe one thing we can look at is a retracement from the previous swing low to previous swing high. Bounced right at that 50% retrace at 123.91. If we fall a little further, we could see a potential next reversal off of the golden pocket, which would be between 117 and 118. So keep an eye on that level next week if we fall through 123.91. Next up is CrowdStrike. This one has shown relative strength to the market in the past, and not loving this candle. Obviously, another rejection off of $200. So that's 4 weeks in a row, rejected off of 200. Now this week we lost the 30 simple moving average, and we're coming and bounced right off of that COVID low anchored VWAP. So we did have earnings, so obviously this is the sell-off on earnings, but let's see if we hold 165. I think 165 key level to hold. You can see all these weeks here holding 165. So if we get a bounce off 165, I think we could take this back up to $200. Here's Datadog. Yeah, the dog doesn't look that great. We had that 1 week where we closed over 114. You can see resistance back here and here. But ultimately, we failed again at that 30-week moving average as we failed back here. And now we're coming back down. So we're under $100. That's not a good sign. But we did bounce off this center channel, which has acted as support in the past. So what I'd watch for, can we hold 92 this week? If we can, we'll back test likely the COVID low anchored VWAP just at over $100, I think right at around 105. And we do have a squeeze setting up with momentum shifting to the upside, but we have been holding under 50 RSI for quite some time. So the dog is looking a little weak still. Here's Google. This one has been pretty tough to trade post split. I haven't really paid too much attention to the chart, but you can see resistance off that 30 weekly moving average. 3 weeks ago, resistance again off that 30 weekly moving average. So that was a pretty good short setup. This one just looks really, really weak. We blew through the 50%. We blew through the 618. Now we're coming down to 106, that 786 retrace. That has acted as support on this run higher. So watch 106.30. If we fail there, I think we could take this trade down to 101, potentially down to 100. Under this level, I think it's got a bigger move to the lower, to the bottom. So again, 3-week squeeze setting up, but very weak on RSI here, holding under 50 for a number of weeks now, actually a number of months. Here's Meta. So this one's still in our falling wedge, still have not tested a declining 30-week moving average. So, I had a note, we may test the lows last week, and we did, right? We tested pretty much right there. I think this is a really good short setup under 154. I think we close, or we get a daily close under 154, and I would be taking this short. I think you got a pretty decent move to the downside coming if we fail there. So keep an eye on Meta short this week. Here's Microsoft, again, back testing this long-term trend line that we've had. Another one that I feel like this is probably a good short. Let's take a look at what level. I would say, maybe under 250. I think this is a pretty good short down to 241. 244, 241 to the downside. Squeeze is setting up, but momentum is looking pretty flat. So watch for a slingshot squeeze to the downside on Microsoft over the next couple of weeks. Here is Nvidia. So I did have this potentially an inverted head and shoulders. Obviously that failed, so that's not what's going on here. And we're failing at a longer term trend line, as you could see here. So this one looks pretty weak. Let's take a look at it from a channel perspective. And yeah, I mean, you could see we're failing there, and this is probably a pretty good channel to see. So if we fail below this channel, I mean, we've obviously already failed at the recent lows. So that's definitely not good. 140. We can't reclaim 140. This has got a shot at coming down. I would say potentially to 123. You could see if I extend 123 out, support. I would expect at least a bounce here at 122.64, but watch for a failure. All right. At this point, I think this is a pretty good short under 141 down to 122, but under 122, I mean, this has a long way to go before you actually see some more support. I mean, $100 certainly can come. I'm just drawing out these levels pretty quick, but 122, 107, 94, 79. Nvidia, as I was saying with AMD, semiconductors looking very, very weak right now. Here's Shopify, definitely going to be one of my top watches this week. Do we hold this channel that we've been holding, right? This range that we've been trading in, $30 to $42. We've bounced there once, twice, 3 times. Is 4th time's a charm? I don't know. I think if we fail here at $30 this coming week, I think this is another one that's a really good short. You could see it's been acting as pretty decent support. Let's say 29.67. Let's see here. Yeah, I mean, we bounced all these weeks here back in 2019, but if we fall below that, I mean, this thing can really drop. I mean, there's not that much, down to about $17. So that's a pretty big move on Shop. So very careful. We gotta watch this $30 level really closely this week. We fail there, I think we're coming down hard. Here's Snow. This is a little bit disappointing. We had a really great close 2 weeks ago, and it looked beautiful, right through that 30-week moving average, right through the down channel or the down trend line. Squeeze started to set up 2 weeks ago. Last week we got positive momentum. And listen, this still is looking decent, right? Inside week here, but I really was looking for a follow through. I think just the market conditions really messed with it. But 171 would be where I would be looking to see this hold. If we do bounce, then watch for a move back up to $200 over the next couple of weeks. And last but not least is Tesla. Again, I'm just playing around with what this wave count might be. It could still be a 1, 2, 3 in our wave 4 pullback, potential wave 5 back up to the top of this channel. But yeah, I mean, anything is possible. This certainly could be in ABC. This could be your X, right? ABC, that could be your Y, and then an ABC, that could be your Z. So, or WXY, I should say. So WXY. Keeping all wave counts open here on Tesla. Again, I think it looks pretty weak relative to the market. I'd be watching 260. If 260 fails, then watch for a pullback to this golden pocket here between 244 and 248. I think, pre-split, I was looking for a move down to 550. So I think that certainly can still come and play out into the end of the year. So certainly keep a close eye on Tesla moving forward. But I'm still getting a little used to the post-split price action. So I haven't been trading Tesla as regularly as I used to. But I do plan on continuing to watch Tesla, observe its price action, understand its personality, how it's trading post-split, and then hopefully get back into a groove in trading Tesla more frequently, in the coming weeks and months. So that is my review of the tech charts for this coming week. Still looks pretty bleak. It still looks, like we might be coming down some more, but we'll keep our eyes open, our biases to the side, and we'll trade price action as it presents itself each day. So that is my review. Take care, everybody, and I will catch you in the markets tomorrow.